For this video, we want to go through a sample Ohio form IT-1040, which is an individual income tax return. So the IT-1040 can be filed for residents, part-year residents, or non-residents. In this example, we're going to be looking at a full-year resident return. So we've got the Ohio return here. We've also got the 1040 for our taxpayer as well, the federal 1040 that is. And then I've got one slide here covering some background on the fact pattern and then some Ohio tax resident notes that are going to be helpful in completing the filing. So if we take a look first at the fact pattern, we'll go through these details and then we'll move on to the federal and the Ohio 1040. So the fact pattern we're working with here, we've got Adam, taxpayer. He's a single filer, so unmarried, and he's a full-time resident of Akron, Ohio. He works as a consultant, and his W-2 income for the year is $84,000 per his W-2. So that's box one of his W-2. He made a $3,000 pre-tax 401k contribution during the year. And the W-2 also shows that he has Ohio state income taxes withheld of $4,171 and some Akron City income taxes withheld of $2,100. Now, Adam has a U.S. bank account that paid him interest of $100. He also has a brokerage account that paid some qualified dividends out, $250. And then he's got some short-term capital losses and long-term capital gains on the sale of those securities. Now, Adam is also invested in a Florida municipal bond, and that bond paid municipal interest income of $47 during the year. And he's also invested in some treasuries, so those are U.S. treasuries, which paid interest income of $75. Now, for insurance here, he's covered by a high deductible plan at work, so he's eligible to open an HSA, and so he put $1,000 into his HSA during the year. And as far as living conditions, he rents an apartment in Akron, and he has no other itemized deductions. So he's just going to be claiming the standard deduction for both federal and state income tax purposes. Now, some notes here on the Ohio resident return. So the IT-1040 is the base one. We'll also need Ohio Schedule A for those federal to state adjustments. And then the Ohio ITWH is where we report any kind of Ohio state tax withheld from our wages or other types of payments that were subject to withholding. And Ohio needs that to verify the withholding that actually came out of your paychecks, right? Now, deductions on Ohio return, you do get a deduction for personal exemptions. The exemption amount that you can deduct depends on your modified AGI. In our example here, our AGI is going to be greater than 80,000, so the exemption is 1,900. The other values you can find in the form instructions, which lets you know based on your modified AGI what is your deductible exemption. Now, the nice thing here is Ohio follows federal treatment for those contributions to both the HSAs and 401k plans. And that's different from many states. There are some states that don't allow HSA contribution deductions. So California, for example, is one. 401k plan deductions. Pennsylvania is an example of a state that doesn't allow you to deduct those 401k or contributions rather. So Ohio allowing us to do both of those is pretty nice. Now on the municipal bond interest issues, so municipal bond interest is exempt from federal income taxes, but it could be taxed at the state level. Now, Ohio, like many states, doesn't tax the municipal bond interest income from issuers within its own state, right? So if it's an Ohio state muni, it's going to be exempt, but it's going to tax interest income earned on non-Ohio municipal bonds. And so in our example here, because Adam has a Florida bond, he's going to be subject to tax on that interest. Now, Ohio basically has a kind of, they don't characterize between long-term capital gains and qualified dividends. It's all just taxed at the same rate. But they do have differences between business and non-business income. So non-business income is taxed at graduated rates. Business income is taxed at a flat rate. But if you are a small business, you get a fairly sizable deduction, which can often make it where your business income isn't subject to any tax. And then as far as local taxes, depending on where you live, you might have to file a local city return or pay local school district taxes as well. All right, so let's have a look at the return here. We'll start with the federal return and go through these items because we're going to need to highlight a few things that are going to be changed when we get to the Ohio return. So we've got Adam's wages up here, $84,000. We've got the taxable amount of interest here, so that's the savings account interest and the treasury interest. And then over here in the tax exempt interest, we got that Florida municipal bond interest, right? So that's not subject to federal income taxes. And then we've got the ordinary dividend income, all of which is qualified, the net amount of capital gains flowing through from Schedule D. And then on line 10, we have that $1,000 HSA contribution. So Adam completed the $88.89 for the $1,000 deduction. And so that was reported on Schedule 1 in Part 2. Right? He's got his health savings account deduction. And so he gets that deduction on page 1 here for $1,000. And so now that we've kind of gone through that pretty quickly, let's have a look at the Ohio return and see how things change a little bit here when calculating our Ohio taxes. So we've got the Ohio IT-1040, taxpayer social security number here at the top, first name, middle initial, last name, and mailing address. The Ohio County, we're in Summit County here, and then the school district number. You can find these. You can find a database table in the instructions, which will give you the school district number depending on where you're a resident. So residency status here, he is a full year resident. As I noted earlier, if you're a part year or non-resident, you still use the IT-1040. You just have to complete the form a bit differently. But he is a full year resident, single filing taxpayer. And he extended his federal return, and so you get an extension with your Ohio as well. And you just have to mark here to indicate that you did file an extension for your federal tax return. Now, Ohio, like a lot of states, will use as its starting point the federal AGI. So you calculate your federal return first, and then when you have your federal adjusted gross income, you use this as a starting point. And then you have the additions and subtractions to get to what is considered your Ohio adjusted gross income. So the $83,359, that is coming through from the page 1 of the 1040, right? Line 11 here. We've got our adjusted gross income, $83,359. So that is our starting point for Ohio. And then now we have the additions and deductions. So Schedule A is where we report these additions and deductions. So if we jump to Schedule A for the adjustments, you can see here on line 1, any non-Ohio state or local government interest and dividends has to be added back. And so because this is Florida municipal interest, we have an addition to increase our Ohio adjusted income. And then down here in the deductions section, we have to deduct the amount of federal interest and dividends that's exempt from state taxation. So the $75 in treasury interest, that is subject to tax at the federal level, but it is not subject to tax at the state level, right? It's exempt. So once those two amounts are accounted for, we have the additions of 47, the subtractions of 75, and so our Ohio adjusted gross income here is $83,331. Now the deductible exemption amount, right? You get your own exemption as a taxpayer. If you and your spouse are filing jointly, the spouse gets one, and then if you had dependents, you get one for the dependents as well. In this case, our modified AGI is above $80,000, and so we're going to get just one exemption at $1,900. And so on line 5, when we subtract $1,900 from the $83,331, we have our Ohio income tax base of $81,431. Now, the ITBUS isn't required because this taxpayer doesn't have any business income, but if you did have business income, you would go ahead and complete that schedule. So the amount of taxable non-business income here is going to be, again, $81,431. And so now we need to figure out, well, what is going to be the tax owed on that non-business income? And so this is where we reference the Ohio instructions. So the Ohio instructions here have tables within the instructions. You just have to scroll down to the appropriate page. And so we see here our 2022 income tax tables for the IT-1040. we scroll through until we find the range where our income falls within, right? So our income here is going to be $81,431. So we're looking for $81,431. So we've got 80,000 here. So we're looking for 81,431, 81,400. So this is the range we need to be in, right? 81,400 to 81,450 is $2,055 of taxes. So we put $2,055 in non-business income tax liability. The business income tax liability, we have no entry there because we don't have any business income. We only have non-business income, which is interest, dividends, capital gains, wages, right, and things like that. So the rest of the return is pretty straightforward, right? We don't have any credits that we're taking, no interest penalties on underpayments, no use taxes owed. This is a really important one that taxpayers need to be mindful of, right? If you pay for out-of-state purchases, let's say e-commerce online, and they don't collect the appropriate amount of Ohio sales tax, you might owe the use tax, so be on the lookout for that. So our total Ohio tax liability is $2,055, and the amount of income tax withheld per our W-2 was $4,171. So remember to complete the IT withholding form. So the schedule of Ohio withholding, enter the information as you would see it on your W-2. So P is for the primary taxpayer here, EIN for the company on the W-2, the employer's Ohio ID number, wages, federal income tax withheld, and Ohio income tax withheld. So the total amount of Ohio income tax withheld that Adam's going to be able to claim here is the $4,171. So the actual taxes owed based on his income was $2,055, but he had $4,171 in withholding. So he gets an overpayment or an amount refunded to him of $2,116. So Adam is elected to just have this refunded to him. He's not going to have it applied to next year's taxes. He just wants his money back. He wants a refund check. So Adam's going to get his $2,116 in Ohio state tax refunds, and then he'll be ready to go for next year. So I hope that covers it for this tutorial. Pretty straightforward. If you have any questions, please leave me a comment below. And as always, I look forward to seeing you again on the next video. Thank you.